Have you ever seen sentiment this bad outside of a recession?
I have not. I worry about the soft data becoming market reality, becoming hard data reality. And I think that's the path we're on right now. And it's a path that has a strong whiff of stagflation.
Which raises the question, at what point can you feel like that worst case scenario isn't what's going to come to pass? What could happen that could make you think, actually, this is a rewiring of the global order akin to Thatcher or Reagan?
So think of what has happened in the last 2 months. In the last 2 months, we've gone from US economic exceptionalism to stagflation. We've gone from Germany is stuck in a low-level equilibrium to Germany's Sputnik moment. We've gone from this is going to be a one-round rewiring of the global economy to this is going to be a multi-round rewiring. We've gone from the US outperforming to the US underperforming European equity by 17 percentage points. We've gone from a bond market that was worried about the vigilantes to a bond market that's torn between low growth and high inflation. This has been an incredible transformation. Consensus is we're in an uncertain period. Where I think is a really important point is where is this leading to? And as you said, there's two possibilities. One, I call it the Thatcher-Reagan, where we go through disturbances, we rewire the economies, and we come out with a streamlined government, better their dynamics, and an able private sector with major innovations coming up that can change productivity and a fairer trading system. That's option A. Option B is Jimmy Carter on steroids, meaning a stagflation that gets embedded in the system that paralyzes policymakers, and it takes a major slowdown in order for the policy stance to respond. I think it's 50-50. The market sees it as 80-20. And that's what we've got to figure out.
Wait, hold on a second. You think that the market is pricing in an 80% chance of the Reagan-Thatcher situation, of the best-case scenario, and only a 20% chance at the same time that you do see this huge spread in performance between the U.S. and Germany. You do see such incredible entrenched pessimism in both consumers and corporate executives.
Market prices, if you look, what's happened to credit spreads, they've hardly moved. If you see equity, we're back to November levels. We haven't had a dramatic. What we have priced in is the uncertainty of the journey. What we haven't priced in is what I think is a 50-50 destination. That is what's going to sort itself out over the next few weeks and months. And I worry when I hear the Fed, when I hear Chair Powell at his last press conference dismiss the soft data as, oh, soft data is not going to get translated into anything worse. Bring in again the word transitory on tariffs. You've spent the whole morning saying the right thing. We don't know how other countries are going to respond. If you hear carefully what the president has been saying about tariffs, and you ask the question, how does he meet the multiple objectives he set out? He has set out revenue, he has set out onshoring, he has set out non-political, he has set out reciprocity in a fair trading system. What you end up with is option 3 for Anne-Marie, the hybrid approach, where you have a universal tariff across the board, then you have surcharges according to sector, according to country, that are subject to multiple rounds of negotiation. Not one round, multiple rounds. If that happens, then the notion that the inflationary effects are transitory would be really good news, because we have a recent history of inflation and people will not dismiss it as quickly as the Fed seems confident that they will.
If we want to see potentially this Reagan-Thatcher constructive approach, what do you want to hear from the president today?
So it needs to be as far away from a spaghetti bowl as possible. Spaghetti bowls are really hard to unwind. That is why protectionism is so dangerous, is because it's so tempting to use a country-specific, sector-specific, and next thing you know, you cannot figure out where the distortions are in the economy. So if it is the Reagan-Thatcher moment, you need clarity on an across-the-board universal tariff. You need clarity on what's going to come on deregulation, because we haven't heard much on that as yet. You need clarity on what this public sector reform, are we remaking it or are we breaking it? That's a fundamental question about the public sector reform that we're seeing right now. You just need clarity. And that's why I put it 50-50. I was recently in a meeting with people I respect, and I forced them into these corner solutions. I said, here's option A, Reagan, Thatcher. Here's option B, Jimmy Carter. Give me probabilities. These are smart people. The range went from 80-20 to 20-80. That is the extent of uncertainty about the destination.
But you likely won't get clarity today if Trump wants to have negotiations and do deals. So what's your base case?
So my base case is exactly what you said, is that we're going to get option 3.
Hybrid.
But I must say, and I laughed when people said, I don't know. I put up something on social media today saying, every time I've been asked on this question, I've responded, I don't know. It doesn't stop people from asking me. So if you really put a gun to my head, I say, if the objective of the administration is to meet all these things with tariffs, then this is what you would get. That's the logic of the case. It's not a prediction because I don't think anybody knows what's coming other than a very close circle around the president.